Now, as we head into the overnight session and tomorrow, on the upside, the existing areas of resistance are still valid and in play. So, we've already tested 36.92 half to 37.02 half. It's it's a decent area of resistance. You can see on the trader worksheet that it's yet another kind of bias confirming zone. Above it, we have stronger resistance at 37, 32 half to 42 half. And, that's certainly an area where sellers can step in. And then as the market pushes higher and, starts to kind of punch back into this 3 to 4 day balance that we broke down from, sellers can still be active there as well. And the higher the market pushes, the higher the odds that sellers will step in. So in the overnight session, if we continue this trend and we hit the 37.32 half to 42 half, very likely that sellers will defend there, especially in the overnight session. And eventually, if the market ends up heading even higher, which it very well could, but most likely next week, I don't think necessarily tomorrow, just because it's a Friday, we're heading into the weekend, and I think there's enough, kind of just geopolitical risk that we have seen how, the market doesn't tend to kind of put in those big moves on a Friday. Both sides seem to be risk averse heading into the weekends. So I think that, we could maintain today's bullishness and perhaps, make our way up into 37.32 half to 42 half, maybe even 37.60 half to 70 half, but it is unlikely that we will go all the way back up into 38.15 to 24, although eventually that area may be in play. Now, on the downside, we are going to watch and see if the buyers can now maintain some of the intraday balances. So, looking at the RTH session here, we can see that there's some support built up around 61 or 62, roughly into about maybe 74 or so. So this is going to be the first line of defense for buyers, and if we're holding above this area, this is kind of the more aggressive area of support. So when you're holding above it, it tells you that you're dealing with a stronger market. We also have a bit of a trend that developed in the afternoon here. So, kind of looking a bit like this visually. And, so we can get a pullback, but as long as buyers defend here, we're okay. And below that, we have this pocket of support, which is kind of a wider pocket of support, but, so be it. It is what it is. But, we wouldn't want to see the market breaking significantly below like 36, like something like 36.20 to like maybe 34.35 on the downside. If we push down here, ideally we hold this swing low, and the market just kind of balances above and then eventually perhaps heads higher. But even if we break down, buyers can still step in, but we don't want to see significant pullbacks at this point in time. Here's the swing low from today, and let's just measure it to swing high, get a bit of an idea of the retracement levels here. So, you can see that we have 38% of the entire move at roughly 36.23. So that falls right into that 36, 20 to like 34, 35 area. So buyers are likely to defend over there. And in the event that we break lower, which again, ideally we don't, but in the event that we do, buyers can still be active around the 3600 level, 3600, like 3605 or so. We have another little kind of pocket of consolidation and launch right over here. That's yet another spot where buyers could step in. So, if the market is legitimately strong and we are going to head higher, then, we don't want to see like a big crack in the foundations that were developed intraday. So if the market's going to head higher, then we want to see it holding above, ideally 36.32 or so. And if we start breaking below it, then certainly it would serve as a warning sign, because bigger picture, we are still in a bearish environment. So that would not be a good sign if we, start taking out the 36, 20, 21 up to 33, 34 area. And if we do, then that can result in a push down towards 3600 and possibly a bit lower. And on the downside, the critical area of support, I think, is going to be around this launch. We should not really take out this launch around 36.55 to the recent balance lows around 71 or so. So, I know it's a wider zone, but, if we start trading back into today's first hour range, I mean, then, the whole idea of the false breakdown starts to go away, right? So, you don't want to see a massive move back down to the breakout area, the intraday breakout area. That would be definitely very, very problematic for anyone who bought today. And one other thing that we've seen recently is that we've seen big moves that have been driven primarily by trap traders. I mean, there's an element of that that's always the case. It's kind of built into the fabric of the market and how it works. But recently we've seen more of that, where one side gets trapped and you get a directional move and then it turns around and other side gets trapped, we get a directional move. That's been a bit of a theme lately, is, higher volatility on the back of trap traders. And that's why, we need to continue to be quite flexible in this environment, because even though we've seen a very strong move today, which has taken out the recent 3-day range, now the question heading into overnight and tomorrow is, can that strength be sustained? Because again, when you have this situation, a lot of the buying can be driven by the trapped shorts, and it's a short squeeze. But then what? Well, now in order for it to continue higher, you need to attract actual buyers, because short covering is, synthetic buying almost. Like it's short term, and once it's gone, that's it. Like they're out of the market. They're no longer acting on it. They're no longer a player or a force on the market. So now, in order for it to head higher, we need to actually get legitimate, we need to get longs basically involved in the market now. And that is the question. Are people going to step in and put on long positions at these higher prices? And there's no saying whether they will or not, because the bigger picture bias is bearish, because we're in this very bearish environment. So even as we head into tomorrow, despite the strong buying that we saw today, we still need to be quite flexible and open-minded as to how this thing may play out tomorrow, just because of the way the environment and context is set up. It's not the simplest thing in the world right now. So, if we are going to head higher in any meaningful way, then we don't want to see too big of a retracement. And if we do, then that is problematic for this bullish move.